This video in less than 10 minutes is the complete blueprint to make your first $10,000 a month as a trader. You can be an absolute beginner. You don't need any previous knowledge. You don't need to buy a course at the end. You don't need to give me your email at the end. I have nothing to sell. I don't care. I'm just giving free stuff on the internet for people who want to listen. And you know what? When I check my YouTube stats, I know that 95% of you guys are not going to go until the end of it. Wish, do as you want. I'm going to put that there. And 5% that will look at until the end will know exactly how to make 5 figures in this month of July. So let's get into it. The first thing I'm going to tell you is we will not go on these graphs for the next 2 minutes, and you really need to follow me, okay? I'm going to go right inside of the process of the fundamental analysis with AI, and then we're going to go back on the graphs. Plan, you don't need any subscription, you don't need any previous knowledge, you don't need anything else, okay? It's been a minute, and you already know that if you watch the next 5 minutes carefully, you're going to know how to trade. The first thing you need to do is go there, okay? This is Claude. As you know, Claude.ai. It's really easy. Prompt is pretty long. Prompts in the description of this video for free, and you don't even need an email. You can just grab them. It's easy. So as you can see, all of that is going to explain to him what you need. A prompt is a command. It's going to respond to that command and give you what you need. Here we want a global fundamental analysis before any trade. You need that. Okay, you don't need to go on newspapers. You don't need any payment software, anything expensive. You just need that prompt. That prompt is 2 seconds to type in. You just copy it in the description, paste it, and here you are. So basically, this gives you the overall gold fundamental analysis, all of it. Okay, I'm not going to read everything. It's very difficult, very, I would say, long, but what we're going to do is clarify this prompt with a clear entry on the last 48 hours. And this is what you want to paste in also. Create a trading plan areas to look for clean entry and need to have a bias based on the last 48 hours. Are we bullish or bearish on a fundamental basis? Some people are going to take me for a fool or a beginner, but I made 6 figures last month using AI and this simple strategy. So you need that prompt. If you don't send that prompt first, all of this is bullshit. If you send that first without this before, it's not going to work. And here he's going to use all the data that he's been sending before, and he's going to clarify it with the demand zone, double tested, the liquidity, basically everything you need, okay? So the key levels, and this is based on my strategy, the training plan, and both scenarios. I've been training my Claude. This is why he's responsive, and in the description of the video, as I told you, I'm going to give you all the prompts if you want to train your Claude too, because your prompt is going to be a beginner, your Claude is going to be a beginner, mine is not. So stick with me. You're still part of the 95% that didn't go until the end. There's 3-4 minutes left and you'll have everything in your hands. The trading plan is easy. You've got 2 scenarios. Scenario A, bullish. Scenario B, bearish. You're going to tell me, yeah, easy. Trading is going both sides. But basically here, it's going to tell you that you need to wait, okay, for a liquidity sweep before or a confirmed break and close below. So what you need to understand is that both actually can happen. It depends on what goes first. You need to wait for an event. This is an event. You need to wait for it, okay? Once you see this event passed, basically you need to wait for a moment and enter. And if this happens, you don't enter and you put that target. It's really easy, you know? He's giving you everything just right now. So you need to wait for a liquidity sweep below 4,000. Then a retest, and then what's going to happen is you're going to go on this entry, and if this happens, it destroys your entry. I'm trying to make it as simple as possible so that everyone understands. It's just a question of number and a question of graph. Just with that, it can work, okay? Now I'm going to explain to you how to read a graph quite easily so that you understand how you can use that on that, okay? So the first thing you need to understand the prompt, you need to understand the concept. Here is a simple graph. I'm going to take off my last trades, and on a graph like that, you can see that the price is moving. So you have only 3 ways for the price to move, okay? Only 3. So if you've been to school, you know how to count to 3. It's very easy. Look, what you need to do, take a brush. This is what a trading graph looks like, okay? You can see that you have bullish, you have what we called accumulation, and then you see that you have bearish side. So basically the price is not just a line. Sometimes it looks like that here, but it's not like a straight line. It's always going to do like this. And this is what you call structure. A structure can be bullish And for it to be bullish, you see that the lows have to be higher, higher, higher. And the highs need to be higher, higher, higher. If you have lows that get higher and higher, and if you have highs that get higher and higher, you are in a bullish structure, okay? If the market goes sideways, basically it's called a range. It means the price is going from point A to point B, but there's no clear direction. It's very dangerous to trade, even though it looks very calm, okay? You have two ways of trading a range, or you wait for it to break and reintegrate, or basically you wait for it to try to reintegrate, fail, and let go away. This is how you can trade a range, okay? Or you can trade the inside of the range. So you put your stop loss under, but it's really risky and most beginners fail to do that. The last kind of structure is bearish. And you know what? It's as simple as before. You've got your highs that are going to be lower and lower and lower, and you've got your lows that are going to be lower, lower, and lower. It's very easy. Everyone can learn that. Everyone can do it. So why am I teaching you that? Because you could tell me that you can just put your simple Claude prompt, but Claude doesn't see the market. He's giving you news and he explains to you how the market is going on a macro basis, okay? So how is the world evolving and how it should impact gold? And then he gives you scenarios. So you need to understand scenarios. How does it work? Basically, your graph is going to move. So you can identify, the first thing is to identify what goes on in the world, okay? Fundamental bias. Once you have that, you know that we are, if I go down, basically, we are more bearish than bullish. So scenario B is the most interesting one in this case. In my strategy, I'm always going to trade the trend, okay? The trend is your friend, you know the sentence. So it's easy. Here, he tells us that the trend is bearish, meaning it's going down, as you can see. It's going down. And as you can see, lows are getting lower and highs are getting lower too. So we want to trade gold and sell gold. We want to take profit if it drops off. Now that we know that on a fundamental basis, gold is going to go down, okay? Mostly the most, I would say, probable scenario is that it keeps going down. We want to identify the trend. And as you can see, the trend is bearish. The trend is going down. So what we want to do now is get the right timing, okay? What we want to do is understand in which phase of the market we are in. As you can see, at some points, I'm going to zoom in. At some points, the market is going straight up, very, 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 very bullish, and it's going straight up. But then it's losing momentum, and momentum is very important. Momentum is basically what keeps the market going up. Once momentum is finished, the market, as you can see, will send signs of weaknesses, meaning the buyers that are pushing the price up have no more strength. They struggle to put the price. Why? Because less buyers are entering at this price. The price is not interesting for buyers anymore. And this is exactly what you need to understand. Big actors, because you and me, we're not impacting anything on gold. It's such a big market. So the big actors, the big banks, okay, are actually not really eager to enter at this price. They're feeling like it's not a good price to buy. So this price is basically a price we don't want to buy. It's just logic. So we understand the market is bearish. We understand that our lows are getting lower, our lows are getting lower, our highs are getting lower, okay? So what we want to do is check for momentum loss on the market, and we need to find and identify that if this price is basically our last, here is our last low, you can see, our last high, sorry. And we can see that this high, the previous highs, we can see that they try to go higher, okay? But they fail, meaning there's a push, but we're losing momentum. This area, we can see that it's the third time that they try to push higher, but it doesn't work. And we can see that there's a momentum loss here. Last time it happened, market failed and it went back down. And we're looking for sales, so that's a good thing to do. So what we're going to do here is wait for a breakout, wait for price to go higher, and wait for liquidity sweep, wait for liquidity to go back up, get everyone's stop losses, and then go back down. And here we have all the ingredients. On a fundamental basis, we have a bearish analysis. Here we have a structure, which is a bearish structure. Okay. So price is dropping basically, but it's not linear. It's not just a line. It's just not going straight down. People try to put the price back up, but they fail. And we identify that those are key levels where the price struggles to go back up. Okay. So everything is respected. Everything is bearish. Now we have a key level here. I wouldn't enter before because I have no confirmation. Here, I know that it was rejected once, rejected twice. So I'm going to wait for liquidity sweep. I'm going to wait for everyone's stop losses because most people put a short here. And what happens is they have small capital. So they put it like that. They're going to put it like that. And then they get stop lossed. Boom. They get stop lossed. So what we're going to do is go into the 15-minute time frame. Okay. And as you can see, it's much more clear. Most people are going to put, I'm going to take that off. Most people are going to put something like that. They see the trade, they miss the trade, and then next time they're going to do exactly the same. Okay? They're going to put their stop loss here. They're going to put their TP here. And what's going to happen? They're going to get stop lossed, you know, because the price is trying to get all the stops of every seller here. And it's trying to get the stops of every buyer too. That's why this big movement is a trap. It's a trap. So we don't want to trade that. But we just see that there's a third rejection. And what we're going to try to do ourselves is, because you're always going to miss the movement, we're going to look after the big trap and the price drops. We're going to wait for retracements. Retracements, bullish retracements. So the price going back up. Now we know the trap is gone. It's been rejected for the first, for the second, and for the third time. And now we know that the price is going to drop back, okay? Because we've got lows that are always going to be lower. What we want is wait for a retracement. And when this retracement is over, so meaning here, when our retracement is over, we're just going to take sell right there. And what we're going to target is basically middle of the structure, something like that. Here we have a great risk reward. We have an amazing risk reward. We're not getting trapped by the liquidity sweep. We're trading the trend. We're following the fundamental analysis. We're waiting for liquidations. Okay, we're waiting for everyone to get stopped. We are not falling into the trap. We are waiting for the price to drop and having a clear confirmation. Candle is closed. We're waiting for a retracement, meaning we want a good entry point. So we're waiting for the market to go back up. And then we're selling with a high risk reward. All of that is very easy. Anyone can do it. And the strategy is very simple. I automated that strategy. I made more than 6 figures with it. Believe me or not, you can check my results in the description of this video. And you'll be surprised that a lot of people actually use that and make money. It's simple. You don't need to buy a course for $2,000. It means nothing. It's unuseful. This strategy is easy. It's free. Everyone can do it. You can use AI to be using it with an automated system. I have my own AI agent finding positions like this one on the market, and it's free. If you want to access it, you've got a link in the description. Click on it. Join us. It's free. Send us a message and you'll have this bot for free. Okay. It's going to find all the trades with similar setups and it's going to take the positions by himself. That was it. See you next time.